Thank you so much. Good morning, everyone, and welcome to the Fintech panel of Africa Arena. I'm very lucky today to have three extremely good panelists to speak on this topic, and I can't wait to hear about their impression about the market in fintech for the next few years. To get started, I will just quickly introduce myself and also give an opportunity for the speakers to do the same. So I'm Leslie, I'm co-founder and COO of M Studio. For those who don't know, we are a venture builder based here in Abidjan, and we have the vocation to support and finance startups, including fintechs. So actually, I would say half of the startups that we have created so far are fintech companies, and we want to make sure that we are contributing to financial inclusion and to have an impact in the informal sector, which is the population that is often excluded from financial services. So we do so by having a first focus on Ivory Coast, but we hope that our startups will have a regional impact in West Africa and Francophone Africa at large. To get started, I will start with ladies first. I'm going to ask Michelle to introduce herself and let us know a little bit about our activity so far.
Thank you, Leslie. Thank you, Leslie. So Michelle Alade here, I'm the co-founder and CEO of Defaca, which is a financial company that's focused in the transport industry. We pretty much ensure that drivers get included in the financial system, but we also work with actual financial institutions and private investors that are interested in that sector but do not have the know-how to reap the benefit of working in that industry. In the past, I worked in few startups as a co-founder. I used to be a co-founder at Moja Ride, and I also have a risk management background. I work with risk management and compliance, so I work with bank and fintech company, just making sure that they meet regulatory compliance. And from the bank perspective, ensuring that by working with fintechs, they are understanding the risk that fintechs are bringing in and still in line with regulatory compliance. But from a fintech perspective, making sure that the IP are protected when they work with the banks, but also meet the regulatory expectation.
Thank you, Michelle. Mehdi, please.
Hello, good morning everybody. My name is Mehdi El Mesek, and I'm the CEO of Babimo. We are a fintech and we are helping small merchants, those who represent 80% of our economy in West Africa, and we are helping them grow their revenue and receive all type of digital payment. But not only that, we are helping them also in growing their revenue, and all of our merchants, since they are using Babimo, they have seen the turnover grow by over 30% until now. Thank you.
Thanks, Mehdi. And Felix?
Hi, good morning, everyone. My name is Felix Darko. I'm the territory manager for Ghana, which means that I essentially handle all things revenue. So that's chiefly our key accounts as well as growing new business. Paystack, which some of you might know, is essentially aiming to provide a full payments technology stack to businesses across Africa. We're currently in 7 African countries. So that's Ghana, Nigeria, Kenya, South Africa, Rwanda, Egypt, and then of course Cote d'Ivoire. We launched in Cote d'Ivoire a bit less than a year ago. So we're currently looking to sort of grow our market and really understand, I think, the nuances of both the Ivorian market, but generally Francophone African markets. I personally have seen Paystack started in Nigeria, really built out the technology stack and the products for the Nigerian market. And as we've grown into other markets, we've really seen that there's so much nuance, so much difference between even just 2 neighboring countries. And so that's currently what we're really looking to do in Cote d'Ivoire is really take our time, understand the markets. We really like to build on strong foundations and not just run into the market and throw everything at the wall and see what sticks. So yeah, that's Paystack. Thanks.
Awesome. It's very interesting to see that Mehdi is still at a very early stage of his fintech, and we have Paystack that has scaled already across so many countries. So hopefully we can also dive into what these two stages imply for a fintech during this panel. To get started, maybe we want to get a view of your impression on the industry for the past few years. What is your take on the fintech industry, and where do you see it evolve for the next 5 years? What are some of the trends and opportunities that you foresee for fintechs in Africa for the coming years? We can start with you, Felix.
Thank you. I think it's been an interesting time over the last few years in fintech. You know, we had sort of the investment boom. Everybody was throwing money at fintech maybe a few years ago, and we saw like a real decline in that. People thought, fintech is now boring. Let's throw money at blockchain, at clean tech, at what have you. And I think we're seeing a bit of a resurgence of that interest in the fintech industry because there's new technologies that are coming online. There's new sort of channels, pathways that are coming online. I think the conversation around cross-border and interoperability is very, very sort of interesting and important to me. I think that really is going to be the future of fintech in Africa, especially. It's a shame sometimes when I use MTN in Ghana, and I feel like I should be able to go to the next country that has MTN and be able to very seamlessly start using both network services as well as mobile money services, but it quite isn't that at the moment. And so I think the future is really just like the panel name, the era of consolidation. I really think that there needs to be a lot of just inroads made in the connection between fintechs, between telcos, between governments, between banking systems that will allow us to sort of have that easier flow of funds and be able to pay businesses in other countries. Because yes, there's a lot of internal business that happens, but I think that also the future of Africa, West Africa specifically, I think is inter-country trade or intra-continental trade. And we really need these technological systems to help us get there.
Thanks, Felix. Mehdi, do you have any stake on the future of fintech in the next few years in Africa?
I'm totally agree with what Felix just said because I know that in the next 5 years, I will say that fintech will be a bunch of consolidation of many fintechs that comes around and work together to provide a good solution to a type of people, to a type of client or type of consumer if you want. Because maybe, for example, I'm providing solution for the small businesses, and Paystack can maybe help me to help those merchants receive some types of payment that I'm not willing to approve at the moment. And it's the same for them also. They can work with some providers that they are not working with them for the moment because they want to provide solution for the Francophone Africa that they are not providing yet, if I'm not, yes. So I'm totally agree with what he just said in that sense that any type of fintechs in the next 5 years will be in the obligation to work with other fintechs to provide better solution, good solution for many types of people because you cannot just build everything on your own. It will cost you a lot and you will spend a lot of money, and also you will have a lot of losses. And so, yes.
Interesting. I think maybe a few years from now, banks were a little bit seen as competitors to fintechs, and nowadays it's almost unavoidable for banks to work with fintechs if they want to actually remain competitive in the market. What about you, Michelle? What's your take on the industry?
So I really think that there will be, I think that there will be a need to consolidate because fintech will have to scale, and in order for them to do so, they will just have to work together. When a new company enters a market, there are two options. Either they go into it and then try to break into the market, or they just buy another existing company. And looking at Africa as a market, I see that in the next 5 years, there will be a need to scale. The market is also getting demanding. Expectation is getting higher. So, can you hear me? I hope you heard most of what I was saying. All right. So going back, I think in the next 5 years, what we'll see is the need to scale as fintechs are getting into new market. They have two options. One, which is to try to break into the market and or just buy an existing company and ensure that they keep the soul, the soul of the fintech. So from that perspective, consolidation will be a key requirement. But I also think that there will be a lot of involvement from the banking partnership perspective. As you were just mentioning in the past, banks were looking at fintech as competitors, but the truth is they complete each other. Banks have been known to work in very specific, with specific market. Now, what the fintech are bringing in is developing new markets that bank will have not been able to acquire. So working with the banking relationship with fintech will change. And we just talked a little bit about some of the regulatory environment. Things are changing, regulators are getting involved. So that will shape differently the fintech industry as we know now.
So speaking of the regulatory framework, because that's needed for consolidation to happen, how does regulation impact your different businesses so far? How has it impacted your different businesses so far? And what do you want to see in terms of regulatory advances for fintechs to succeed in Africa? I don't know, Felix, you want to take that one first?
Sure. Yeah, I mean, I think the regulatory landscape very directly impacts, you know, the business that you're able to do, the products that you're able to launch, and even sometimes the customers that you're able to serve. So for instance, in Ghana, we have a lot of businesses that want to receive USD, right? Get paid in USD and actually be settled into a USD account. The Ghanaian regulator pretty much does not allow this. You have to like literally write a letter to the Bank of Ghana, and then they, you know, will review, and based on whatever criteria they have, which is also a bit opaque, they may then, you know, allow you to do that or not. And so there's a lot of these things that I think merchants, businesses really, really want in terms of like value or products that we're not really able to provide for them because of the regulatory landscape. And I think it's very, very important for, you know, fintechs, especially, you know, us maybe older, larger ones, to really have these close relationships with the regulators in the various different markets that we work in, and sort of leverage those relationships to slowly effect change. You know, there was a little bit said earlier about sort of lobbying with the government to get some of these changes done, and I think it's very important. But it's a very slow and very frustrating process. And a lot of times, you know, the regulator will go back on what they said. Oh, we're going to do this, and they don't actually end up doing it. You know, 2 years later, it's like, oh, actually, we've changed our minds. I remember, this was a while ago. I don't know if anybody remembers the Echo, which was the currency that they were going to do for ECOWAS. What happened to that? I mean, and so I think there's a lot of these things, but it ultimately is, and I think in business, in Africa especially, it's about relationships. And I think once you nurture those and you're able to then bring the sort of younger, more upstarts into the conversation, you're able to sort of build this critical mass of people that are actually sort of vying for change and vying for a more effective and efficient regulatory landscape.
Right. Do you see any difference between the regulatory landscape in English-speaking Africa versus in Francophone Africa?
Yes. I mean, I think so. I will admit I'm not the biggest expert on Francophone Africa. But I think, you know, one, just given the way that your sort of central banks are set up with France, I think there's a lot more, maybe let's say influence, both maybe positive and negative. I think positive just given the maturity of the French financial system. I think that there's some benefits from that. But ultimately, you know, I think we definitely do need to be working towards a future where, you know, Africans own their own economies. And in what I think is quite interesting is at least Francophone West Africa has a lot of, let's call it interoperability, right? There's a lot of communication that's happening between francophone countries in West Africa that doesn't really happen between anglophone countries in West Africa. You guys even share a currency, and yeah, I mean, just sending money from Ghana to Nigeria and vice versa is such a headache, and most people find very legally gray ways to do it. But it's actually interesting because there's a lot of these businesses that are, I mean, they're doing billions in volume, and they're not actually legal, right? And so, is the regulator doing what they're supposed to do in that scenario? I don't know. Do I want them to do what they're supposed to do? I don't know.
Yeah, that's a good question. I don't know if Mehdi or Michelle, you want to add anything.
You can go.
Okay. Thank you for being a gentleman. So basically, I will go on a wide chase here. What I would like to see is a regulation that allow data sharing. I think that's critical. Like if you really want to go to the next level, data sharing between banks and then fintechs will be key. Um, I can see my bank colleague just throwing the face like, but ultimately for the good of the customer, that's what is for me would be a key requirement because we're talking about financial inclusion, and in order to really do that, we need data. We need to do things differently. We need to look into how can someone that's not included in the current ecosystem can be brought in. And that's by looking at data that is usually outside of what a typical bank has. And even if the bank has that kind of data, does the bank has what is needed to leverage the data and make something out of it? Most of that capability so far have been seen with fintechs, right? So that access to data, like I think was done in the United States with a company like Zelle, like the bank got together and ensured that the data can move freely. So fintech can freely have access, for instance, to banking information for a customer that's just walking the door. And they can just log into that customer bank account and then look at the transaction history and make a decision on the fly whether or not they're issuing them credit. Things like that need to happen here if you truly want to be serious about financial inclusion.
Very good points. Mehdi, maybe something to add?
Yes, definitely. I think that there is something that maybe the local regulatory are missing is that they are seeing, as you said, fintechs as a threat to the financial system. And what I wanted to add on top of that is that what was your question again? Sorry, excuse me.
It's on the regulatory framework that you wish to see in Africa for fintechs.
Yes, I wanted to say something, but I really forgot about it.
It's okay, we can always come back.
Yes.
And maybe just diving more into your respective businesses and starting with you, Mehdi. I think we have seen a lot of growth in peer-to-peer payments here in French-speaking West Africa. I think Machas was mentioning the venue of Wave that really disrupted things and helped people send money for cheaper fees. Now there is a new trend which is starting to really boost merchant payments, merchant acquiring, and you are basically spearheading that. What are some of the challenges that you face today with Babimo, as you are trying to push merchants to accept digital payments?
Yes, so I'm not trying to push them to accept digital payments. They want to accept digital payment. The only threat they are facing is that the fees are too expensive for them. And yes, this is the point I wanted to talk when we were talking about the regulatory aspect. Is that the local competitor or operators, I would say, are not in phase or no, are not aligned with us to provide those type of services. When we want to talk to the banks about getting a license to provide those services, they are not aligned with us. They don't want to work with us. So this is the biggest threat we get. First one is expensive. We can't have access to the license to provide the services we want to provide to change and to develop our economy. We can't provide it because we are in the obligation to accept what they want to do and what they are doing for like over a decade now, and things are not changing. We are still in the same, like it's the same move we are keeping on repeat, and they just want to repeat what other are already doing. So if you go to a bank and you want to apply for having a license to do like the things that Wave is doing or any other operator is doing, you can easily have it. But when you want to change things and allow merchant to accept digital payment, you will struggle a lot. And I'm talking from experience. I struggled a lot to have my license to provide facilities payment to merchants. And the second thing I was saying is that the fees is the things that is allowing our merchants to not easily accept digital payments because it's too expensive for them. We are taking on average 1.5% on each payment. So for them, they they still prefer cash. Receiving cash payment for us, for them, is better. So that's the only aspect that is like treating us a bit. But we are happy because we just saw what the regulator just did with the new regulation. So that will help us a lot. So we think that better days are coming.
Thank you, Mehdi. And maybe Michel, from your experience, because you have worked a lot with banks, microfinances, and other financial service companies to build innovative products that really encourage financial inclusion for underserved populations. Can you maybe share a little bit about some of these initiatives and what was the impact that you were able to create?
Yeah, sure. So I will just talk about what I do now, de facto, which is pretty much doing financial inclusion for unbanked drivers. So this is something that came about from working day to day with drivers, and then realizing that most of them do not own a car, right? And then talking to financial institutions that see that transportation, loaning a car, lending a car to driver can be very risky. And that's why I was talking about having access to data, because ultimately the leveraging the data to make financial decisions changes everything. And in my particular sector with ride hailing, talking about Yango and Uber, we have access to drivers' performance, and that easily facilitate that process, right? But then we also face the challenges of how do we ensure that credit risk is actually mitigated. And leveraging data, we can leverage machine learning at this point, which are emerging technologies that help identify among a pool of potential drivers, and that's a specific example, which one is the less risky, which one is most likely to end up paying the fees and ultimately will not default on the loan. And that's truly what is needed when it comes in terms of financial inclusion, looking at it from that perspective, which part of the ecosystem is currently underserved, what are the tools that are existing at this point to allow us to bring that particular population into the ecosystem. And for me, the key tools are data, machine learning, AI, that will change everything.
Thank you so much, Michel. And for you, Felix, I think we'll be very curious to also learn more about the story of Paystack. Definitely one of the most successful fintech companies that managed to get acquired by Stripe. And I'm sure there are a lot of young fintechs in the room which are having the same dream that maybe someday they can really attract a global player. Can you just share the journey of Paystack from the early days to the scale that you have achieved so far? What do you think is really the secret sauce to that expansion? And what are the recommendations that you can give to younger startups that are just started but hoping to also have a regional presence like Paystack tomorrow?
Yeah, I think that's a really big question, right? I guess to start from the very beginning, so Paystack was founded in 2015 by Shola and Ezra. So they were both at Babcock University, and Shola had already been working on sort of building some of his own financial sort of, let's say, products, and realized that this actually works and we could actually build something on this. and hit up his friend Ezra, and they started to build something. And later on that year, they were the first African company to get into Y Combinator. And I really think that that was really what skyrocketed that sort of initial launch of Paystack. And then over the years, we launched funny enough, we launched in Ghana in 2019, even though I think we're still very much fighting to corner the Ghanaian market. Launched in South Africa in 21, and then in Kenya in 2023, and then Cote d'Ivoire and Rwanda and Egypt all within the last year. And I think, at least from my perspective, the secret sauce, I think, is just building on strong fundamentals. I think I think there's almost two sides to the startup ecosystem conversation. One side is move fast, break things, fail forward, all of that. And I do believe in a good amount of that, but I also think that on the counterpoint, really building your foundation, right? Having your systems in place when it comes to corporate governance, when it comes to record keeping, when it comes to compliance, because these are the things that eventually will let you get acquired or get investment. There's a lot of really fast-growing, exciting startups that are doing a lot in terms of volumes, but they're not getting the investment or the acquisition offers because there's a lot of fishy things going on behind the background. And not that they're even necessarily doing something intentionally wrong, but you need to have the right compliance documentation and processes. You need to have all of these things in place. And I think those are those simple, small things are really what are going to pay dividends in the future. And so I think that Paystack could have grown a lot quicker, a whole lot quicker, right? In places where some of our competitors did grow, much faster than we did, because they were willing to cut corners, because they were willing to do things that were, again, legally gray, and we weren't. We just straight up weren't. And so I think that has maybe slowed down how big and how successful that we could have been in the short term. And we founded in 2015. We're acquired in 2020 by Stripe. And I think the Stripe acquisition is also something that's, I think, interesting and a bit unique when it comes to fintechs on the continent. We're still very much an independent entity. Shala is still our CEO, Ezra is still our CTO. And essentially, we have the African markets. That's our playground. That's where we're going to perfect our products and our services. And then Stripe takes the rest of the world, basically, right? And I think it gives us the advantage of having, Stripe being one of the largest, if not arguably the largest fintech in the world, pass on a lot of their knowledge, their systems, their processes that help us sort of just be more organized in the work that we do. But it also gives us the opportunity to reach for some of the more global aspirations, having such a global partner behind us. So I think generally, my advice to founders in the fintech space especially, is, again, to build those really strong foundations, have those fundamentals, make sure you work with the right people that are actually doing this for the long term. A lot of people want to make money really quick. They want to, let me get acquired in 3 years and retire at the age of 25 or whatever it is. And some people have done it, maybe not so morally correct. But I think if you have that long-term view and you really have all these systems in place, that you're in a good position to get acquired.
Right, I think the Paystack story is quite inspiring for all of us here. Maybe just again switching on the focus on really on French-speaking West Africa, where the market is not as bankerized as it is in Nigeria or Ghana. Mobile money is much more prevalent here. I'm wondering how this affects your different businesses, because we have a lot of merchant payments in Nigeria, for instance, but it's really through card payments. Here you have the challenge of integrating mobile money. And I'm also thinking about the recovery challenges that Michelle might be facing because you cannot have direct debits on mobile money. So maybe can you guys touch a little bit about how do you adapt to this different infrastructure of payment that is much more prevalent here in our ecosystem? Michelle, maybe you want to start?
Sure. So I leverage Julia. I'm not sure if he's still around, but I leverage Julia in my daily operations. It helped me solve a lot of issues from the perspective of collecting the rent from the drivers to sending payment to my financial partners, right? So little bit of advertising, but happy customer there. But then you were talking about the differences in our specific market, right? Some of the challenges that we face right now, and I will just go with the example of what I do on a daily basis, where you have drivers that are used to paying cash. They were slowly moved into leveraging Wave or Orange Money. But then now you have the challenge of I'm getting paid in cash, I'm getting paid in Orange Money, I'm getting paid with Wave. How do I keep track of all of it? How do I streamline my operation? How do I automate it so that I don't have cases of fraud? Because it was talking about making sure that you have the strong foundation. A lot of losses, business that actually do not make it, fraud, operation losses are the key reason. So you, as a fintech, you might have a great idea. You might have the ability to get customers, but if the operations are not strong, the foundation are not strong, the ability to scale will be very limited. So those are the key challenges that we're facing. And having the ability to automate the processes that we have is really one of the key challenges. So we try to leverage different solutions that the ecosystem is bringing. And like I mentioned, July is one of them for me.
Great. What about you, Mehdi?
So basically, I wanted to say first that if you want to automate all your different payments, you can use Babimo.
All right.
So we can assemble them, all of them, on only one app. So you can tell your driver to start to download the app.
All right, let's start. Consolidation already started.
Yes. So definitely, I'm totally agree with what you just said, and I got seriously nothing to add. You said it all, and yes. And you?
Yeah, so I think the paystack perspective on this is also interesting because even across like our, let's say, two, I don't say biggest markets because Ghana isn't as big as, for instance, South Africa or Kenya, but most developed for paystack. Ghana, very much mobile money, over 80% of transactions, even 80% of transactions on paystack are on mobile money, whereas Nigeria doesn't have mobile money. There's no telco operated mobile money systems. There's maybe things similar to Wave, where it's a fintech. They've built their wallet and they let you transact that way. And so, it's interesting to see that the secret sauce in Nigeria is not the same secret sauce as it will be in Ghana, and it's not that it will be in Abidjan or in Cote d'Ivoire. But I think that at the same time, there's still a lot of parallels that we need to identify, right? So again, for instance, between Ghana and Cote d'Ivoire, mobile money is much more prevalent, and so we can find a way to adapt much easier. Whereas if you're moving from a market like Nigeria, where most things are cards or pay with bank transfer, everybody knows the way you know your phone number, they know their bank account numbers. And so I think, especially for companies that are starting out, back to those sort of, when we think about like design thinking and all these things that are sort of the cool things to do when you're building a startup, actually are very, very important when it comes to understanding your customers and your users and that nuance of customer behavior. And what are the sort of technological factors that drive that? How am I paying? Is it a USSD? Is it an app? How does the money flow? Where are the fees? Right? Because we've noticed even like simple things where we have different payment options. Somebody will actually try one payment option, see the fees are slightly different, back out, and then go use something else. And that data is very important to sort of look through and build on top of. So yeah, I think really just understanding that user behavior difference across these different markets and the technological factors that drive it, I think is very important.
Okay, great. You want to add something? Go ahead.
Yes, can I add something about this? This is the biggest problem we get with the mobile money is that the user experience. Because the user experience we have with Wave is different than the one we have with Orange. Orange is really complex to, like, if you want to take the money from the wallet.
I hope there is no one from Orange in the room.
No, it's fine because I already told them that. Yes, so it's really hard to take the money from the wallet of Orange because the user have to go back to his phone and type the number to confirm the transaction, and the wallet you just redirect to the app. It's pretty much the same also for Move and other operators. So that is the biggest pain point also that we have on the technical part. It is our biggest pain point that we have to make it easy for the user to receive, no, to the merchant to receive payment from his user, because or it will take a long time for this merchant to basically receive payment, and that's not our goal finally.
I think to add to that, I think the friction is such a problem, right? And I think users or customers, especially when it comes to payments, they're very quick to abandon, right? And so even when you look at Paystack data, like, I mean, 60% of all transactions are abandoned before somebody ever even puts in their phone number or their card number or whatever it is. And understanding that, I mean, sure, some people are just checking something out. Some people are actually giving up. I'll pay some other way, or I won't even buy the product. And so for a lot of these smaller merchants, when you put that barrier, you're almost killing their business, right? And so you want to build that experience. And we always think of user experience as like, oh, what is the app and the colors and the icons? But it's something as simple as your USSD menu. Like, I'm frustrated every time I use MTN mobile money in Ghana and I have to enter the person's phone number twice. Why? Right? I understand you want to eliminate fraud and mistakes and all that. But if you're going to pop up the person's name at the end and say you want to pay Kofi 10 cedis, then I know whether or not I made a mistake. So there's a lot of these little nuances.
Yeah, so user experience is key in integrating all these modes of payment. Just before we get to our last question, and we'll open the floor for the audience to also ask theirs, I was curious for Michel to learn more about your experience in lending, because we have seen a lot of lending startups get a little bit controversial. For the past few years, we had a lot of trends. We had buy now, pay laters, asset-backed finance, which you are doing right now. We have pure B2C credit to consumers, which I know in Kenya was very controversial at the time because it was a lot of people eventually getting into debt and not being able to repay. What's your view on the lending trends, and where do you see it being consolidated in the next few years?
So I think, again, it would go back to access to the data, because right now, a lot of those fintechs are working in their own silo. And collecting data takes time. Collecting good data takes a lot of time. Knowing what to do with the data is another issue. So with the example that you gave, peer-to-peer lending or buy now, pay later, or asset-backed finance, which is kind of what I do right now. And I'm a bit biased from that perspective because I think the risks are lower. But then, again, I already chose that sector for a reason. I believe that once the institution, the fintech or telco, because in our case in Ivory Coast, the telco has a lot of data. They have data on how an individual behave, transaction that they make, right? Banks don't have that kind of data, right? They just don't have that. So if you think of Orange, for instance, they offer credit to consumer, but they do so by leveraging the data that they gather. They have algorithm behind that allow to identify which is most likely to repay. And this is not done in a vacuum. This is something that takes time, that takes a lot of effort. So I see that the small players that came in, trying to do the same thing without that kind of data will ultimately end up disappearing, which is the reason why there was a lot of controversies with the approach that are being taken, the aggressivity that they leverage to collect the money, because the credit risk management process is not actually being done appropriately. So we end up having harsh measures, and then that has an impact on the view of financial inclusion, right? It's when we get into the gray area of, are we taking advantage of the population that we are potentially trying to include? When we get asked the question frontally and the answer is really not clear, that means that in the background, some of the processes were not well put together. So the idea and the goal might be noble, But again, if the foundation is not correct, it will always show up. And for me, that's the key thing. We might start doing something great, but unless the foundation are well established, the end result will be controversial. So there is the key difference between I'm getting to financial inclusion, I'm allowing key population to have access to loans, because right now the way the banking system is set up, it might be difficult for a random person to come in and just ask for a loan. But with the information that we see on the way they receive money on the mobile wallet or just spend money, we have the ability to issue them loans. That's a great idea. But then ultimately, if we end up into predatory territory, how do we make sure that we're not taking advantage of that population? And that's where foundation, strong ethics, strong compliance come into play.
Makes a lot of sense. And maybe just to close this panel, our last question for the three of you will just be maybe to look back at your journey and what would be one of the biggest lessons that you have learned building a fintech and preparing this fintech for this era of consolidation that you can share with the audience today. Go ahead.
Cool. I mean, I will say that I haven't. My career has not always been in fintech. You know, I started out as an engineer actually, and then became a founder, and then supported founders, and then found my way into the fintech space. And I think that throughout that journey, you know, having been on both sides, being the business owner and then also being the person that's sort of servicing the business, I think a lot of times when you're just looking at numbers on a screen, right? It's hard to really see the actual humans behind it, the lives that are being impacted behind it. And so, you know, something as simple as a 0.1% difference could mean somebody feeding their kids that day or not, yeah. And so I think for me, the big lesson is look behind the numbers, really understand the people that you're serving. I think this goes back to the point around like user experience and learning nuance, is understanding day to day, how do your products and services affect the lives of these individuals? What can you do to provide more value? Not to make more money, because that'll come. When you provide value, people will pay you. And so I think that the first thing in your mind should be, how am I creating more value? And then on the foot of that, how can I then reap the benefits? And so I think that's my lesson.
Thank you, Felix. Mehdi?
Yes, definitely, because it's the same mistake that I did when I was starting Babimo, is that I was behind my office and I was building the app, and I was imagining the problem that those merchants are having. And I failed. At first, I failed because I wasn't addressing the problem right. So, one of the mistake that I was happy to make this mistake because I learned from it is that you have to go on the market to fail fast, not being afraid of failing. It's normal. I mean, so fail fast, go on the market, and do marketing. When I was getting my like the biggest deal and the most transaction is that when I was going on the market and talking to my users and seeing what is the problem, what am I addressing from them, what am I solving as a problem, as an issue for those people. And this is the part where I learn a lot from my consumers, and I learn how to build my product and how to address their problems. And I saw that their problems is payment, but there is something else than payment. A merchant want to have more sales. So definitely that is a problem that I can solve for them. So I make a product also that you can receive payment, but you can also increase your sales. So this is something that increase my volume of transaction, triple them in less than 3 months. So this is something that I cannot learn if I was just behind my office and telling my salesperson, go on the market and go find consumer to download the app. And also marketing, you have to do the marketing and tell the world what you are making basically. And that also what let me grow also and having volume transaction.
I totally agree with you. This is also one of our main learnings at M Studio. When you provide some sort of SaaS platform, at the end of the day, what merchants wants is higher revenues. So they are not looking for a tool; they are looking for a tool that also provides them greater revenue. So this is really something to take into account for the SaaS founders in the audience. And Michelle?
So I have both background, the founder background, but also I'm a fintech partner, right? So I agree with what my founders here on the panel said. Ultimately, building a startup, it's work that's getting done by talking to the customer. So I won't repeat that, but I will bring something a bit different from the experience working with bank and fintechs and seeing the difference between those two type of institution is that, and I will echo something that the founder of JAMO once mentioned in one of his page. He was talking about the red and the blue sea as the banks being the red and then JAMO being the blue sea. And then as they were growing, they ultimately started to look a lot like the Red Sea. So how do they keep what's key to them, which is the identity? So what I can share is that as a fintech, um, we have to understand our identity, what makes us different from every key other player or the partners that we work with. And when things come in the regulatory environment, going back to our identity, we'll still find a way to stay relevant.
Thank you so much to the three of you. I would like for the audience to give a round of applause to our panelists who are so kind to share about their experiences with us. So thank you, Felix, thanks, Mehdi, and thanks, Michelle. And I will let the floor open for questions from the audience.
And right before that, I would like everybody to give a round of applause to Leslie. To the other woman, Michelle. And Felix and Elmedi, you guys were quite good too. Let's give it up for them. Thank you, thank you, thank you, thank you. Fintech Africa, the era of consolidation has begun. I'm sure we do have questions, don't we? Yes, sir. You can go ahead.
Hello everyone. Thank you for this very insightful session. My name is Touré Lancine, and I'm the co-founder of Gaia Intelligence Africa. I have a question. So recently, the Central Bank of West African States launched the pilot phase of the interoperable instant payment system in the monetary union. What would be the impacts for fintechs? Thank you.
What will be the impact for fintechs? Who's going to answer? Almeri Meseka, CEO and founder of Babimo.
Yes, so I saw that news also coming out, and for me it's a good news. As long as the local partners that we are working with, they are charging us a lot, and that is also impacting our consumer, our customers, and those customers are paying a lot of fees, and that is a treat for them, and that led them not receive digital payments, because that's their first their first trade, and they say to customer, I prefer cash, but if that's the only way of paying you have, I can receive it. So that's for us, it's a positive things. I can understand that for some fintechs, maybe it's not the case. I don't know, maybe, but in my case, it's a positive things.
Are you satisfied, sir, Touré Lancina? All right. You
Yeah, I think it's going to impact the majority of fintech models. One simple use case is the time that it took to have settlement. So if you are collecting money through mobile money or card payment through, let's say, an aggregator, usually you will have to wait 3 to 5 days. But this new system, it will allow for instant payment. So a trader will be much more likely to accept digital payments because he knows he can either cash out or at least receive his money instantly, which is really an incentive to go digitally. So I think it's going to boost majority of the businesses in the room today.
Thank you, Leslie. Miss?
Hi everyone, Lina Kassim. I have a bit of a wild question. So you have 7 minutes, and there's 4 African presidents in the room with them.
Slow
Tell us.
down. 7 minutes.
7 minutes.
4 African
Presidents.
presidents.
So tell us which four and the two things you would ask them.
That's a great question. Can everybody give it up for her? You have 7 minutes. You have 4 African presidents. Can we guess which countries or?
Each of you can choose the four.
All right. So the question goes to the four of them. All right.
Exactly.
We'll go quickly.
Yeah, that's a wild question. I can't even tell you that I know who the presidents of all the
Just name
countries
the
are.
countries.
But
Do you know the president of Cote d'Ivoire?
Ouattara.
Okay, thank you.
Yeah. I think I would definitely want to get like a Pan-African view, and so probably Egypt, Nigeria. I mean, let me not say anything more than that, but Nigeria, maybe Senegal, and then South Africa. And well, I think I missed out East Africa in this. So maybe not Nigeria, and then we'll go to Uganda. Actually, no, another funny one. So Tanzania is a good one, yes. And I think one is, so I think I don't know if, how many of you have heard about PAPS, which is the Pan-African Payment Service System. Thank you. And, we are constantly moving towards this hopefully towards this future of, again, interoperability and cross-border payments, but everything is happening so slowly. The AFCFTA was announced how many years ago, and we still have all these regulations that are preventing us from trading between borders. And so the question is, one, I would love to see North Africa more involved in the rest of Africa's affairs, right? A lot of them might not even consider themselves to be Africans in that sense. Two, I
It's
think...
another debate.
Yeah, it's a tough one, so I don't want to get too deep into it. I think, too, we see a lot of, South Africa has recently sort of, let's say, opened borders to a lot of folks to go visa-free. And we see a lot of people that move towards that part of Africa for work. How do we prevent that? How do we make things better here in West Africa, for instance, or in East Africa, for instance? Yeah.
That will be it.
I think that'll be it.
7 minutes for president. All right, let's give it up for him. Almeri, your turn, quickly.
Okay, so basically I will choose pretty much the same countries as you, but not Tanzania. I will choose South Africa, Egypt as well, Nigeria. Yes, and South Africa basically. So those are the 4 countries that I will choose, and I will tell the president to, I will incentivize them first on what fintechs can build for our African countries, all the 54 countries in Africa, and how this can improve our economy and how can this help us to grow rapidly. And I will suggest them to build a coalition around these things, and let's start a pilot phase when we can help our ecosystem to grow faster, because as long as 80% of our economy is not formal, we can do something about it. And during the pilot phase, I will do everything to show them that we can build something really great. And by doing this, they will show the impact on their economy, and they will suggest it to each central bank of their different state to build something. So that will be it.
Are you sure you won't be a politician one day? Thank you.
Not
Let's
yet.
let's give it up for Elmedi. Michelle?
All right. So I will go South Africa, Nigeria, Côte d'Ivoire, of course. Come on, guys.
Abidjan est le plus doux au monde.
On a gagné la CAN.
3 étoiles.
And then Morocco, right? And what I would ask for is pretty much a structure where data can be shared freely and allow fintech, whatever startup, corporation to leverage that data for good, and whatever good means to the company, and see what come out of it. That's how I'll answer your question.
Ladies and gentlemen, the next woman president of Côte d'Ivoire. That was her. And then Leslie, you may answer that too.
Sure, I think I will stay in Francophone Africa, so Waimo region. And what I will ask is not very ambitious. is simply to just have more coordination with the central bank, because we do have a central bank for all the states, Senegal and Cote d'Ivoire and so on. But it seems that if you do close a contract with the central bank, let's say in Senegal, you still have to come to Ivory Coast and renegotiate that, and you still have to go to Togo and renegotiate that, which doesn't make sense because we are claiming to have a central bank that centralize all the licenses and all that. But in reality, operationally, is still not the case. So maybe just a bit of effort towards that to make it a reality for fintechs.
Are you guys all satisfied? If yes, say yes. All right, thank you very much. Leslie, Felix, Michel, and Elmedi, thank you very much. It was a great panel. I'm sure everybody. Oh, one last question? One last, if you guys don't mind.
Thank you. So my question will be for Felix mostly, but other panelists can add something if they want. So my question is about Paystack and Flutterwave. Since we are starting a new era of consolidation, can we have your opinion about that? Do you think that there is a future where Paystack and Flutterwave go towards consolidation, more cooperation, or do you think it's a good idea to have the two companies stay apart?
Thank you so much. That's a lovely, lovely question, which might very well get me in trouble. I think, first of all, I'm speaking personally. I'm not speaking on behalf of Paystack, the organization. So I hope that's on camera. Yeah. I think my short answer is no. Collaboration, sure. Consolidation, I do not see that future. I think our two companies operate very differently. I've spoken a bit earlier today just about strong fundamentals versus moving fast. I think our competitor likes to move fast and break things on the way. And we are very much the opposite of that. And sometimes to our own detriment, right? It takes us longer to really capture markets because we want to be fully compliant with the central bank of the country. We want to make sure that we have the right corporate governance structures and all of that. And again, I'm not making any sort of accusations. But I think that there's value in competition. Right? And there's value in having an adversary is a strong word, but adversary like Flutterwave that pushes us to be our best, to innovate in the products and the services that we provide. And I think, keeps us on our toes. So no, I don't see consolidation. I do hope for collaboration in the future. Because I do think that combining forces, especially forces as big as the two of us, could do a lot of good in the various markets that we work in. So that's my answer. I hope I still have a job when I get back home.
And that's his final answer. On va les applaudir, on va leur dire merci. Leslie, Felix, Michel, Elmedi, thank you guys. I'm sure we want to hear about pitches. If yes, let's give it up for all of them. Thank you.